You have some of the most engaging writing around.
Thank you.
Indeed, your latest piece is titled, and I quote, BBC. And you use some very colorful scene to depict Jerome Powell, and correct me if I'm wrong, submitting to fiscal dominance of Mr. Besant while watching in his cuck chair.
Yeah.
What imagery, bro. I mean, it's poetic, sir, poetic. But yeah, the whole premise of this piece was around the Fed submitting to the whims of fiscal spending. So do you want to give us a bit of a TLDR of why you think Powell would submit himself to this cuckoldry?
So essentially what I'm arguing, and I think it's backed up by historical fact, is that the Fed chairperson likes to put out there to the market that they're the head of this independent organization. They're tasked with stewarding the strength of the dollar, making sure inflation is low and unemployment is low in the United States. When in reality, if you look at how history has actually panned out, the Fed is another arm of the government. And when called upon to do their duty and help the government fund itself at affordable levels, they do that. So if we go back to World War II, the Fed essentially merged with the Treasury and conducted yield curve control, printed money to fix the price of U.S. government bonds at 2.5% on the long end, in the bid to help the U.S. government rearm itself and fight the war and make sure it could do so affordably. In the 1970s, Arthur Burns wrote a famous essay called The Ignorance of Central Banking, and he basically lamented how, yes, at any point in time, the head of the Fed could squelch inflation, could raise the rate of interest, could restrict credit, and contract the economy in such a way that inflation was vanquished. However, the government and the politicians and the electorate voted for policies that embed inflation into the economy. And the Fed is pressured to do its duty to make sure that the government can do what its people want, which is spend money. And I had some colorful quotes from that particular essay. And, Greenspan had the Greenspan put in the late 80s and early 90s. We had Ben Bernanke with helicopter money after the global financial crisis. And Janet Yellen continued quantitative easing. And as the head of the Treasury, did her own form of money printing by shifting issuance to the short end of the curve to drain the reverse repo from September of 2022 until she left in late 2024. So all of these former Fed chair people have all done the same thing. When the government needs money cheaply in large quantities, they provide it. And so Jerome Powell is doing the same thing. And we saw his capitulation at the recent March FOMC press conference. So, by all respects, and I know stocks are down a bit on the year, but the S&P 500, NASDAQ, they're at, all-time highs. People who own financial assets in the United States are the wealthiest that they've ever been in history. You have unemployment at 4%, very low level. You have real GDP growth growing at 2 to 3% for most quarters post-COVID. This is above trend. This is a great economy. Yet Powell felt the need to say that quantitative tightening, which is reducing the accommodation that he provided during the COVID years, would slow down and basically stop by mid-year. He would tease the start of quantitative easing, money printing, essentially to buy treasuries. And, what I thought was quite hilarious was he said that the inflationary impact of tariffs was transitory at best. And therefore, his easing bias is going to continue even if inflation shows up in the CPI metric. So, it doesn't make sense that Powell is having such easy monetary policy or not continuing to go very, very hard to crush inflation. Inflation is still above their 2% target. It's on something like 3% or whatever the PCE is at right now, but it's above 2%. It has never gotten below 2% since it crossed that level in 2022. So why is he stopping? Why is he not continuing to raise the rate of interest, restrict the amount of credit, and really destroy inflation? Because the US government needs to fund $36 trillion of debt that grows exponentially at an exponential rate of interest payments. And therefore, he needs to step up to the plate and print the money. And he's going to do it. And that's what he told us in March. And that's what basically really cemented my view of being very, very bullish in the medium term on crypto, because I believe that crypto really just trades off of how many units of fiat are there in the world. If we have the largest fiat emitter of the United States saying they're going to start trading on QE, you can bet that the rest will follow: China, Japan, European Union, et cetera. So that's essentially, the essay in a nutshell and my interpretation of that press conference a few weeks ago.
Okay. There's a few questions I want to follow on there. Now, obviously, you referenced Arthur Burns and in that same essay, Paul Volcker, right? And Powell says in the back of his in his head when he's sitting in the cuckold chair that he wants to be remembered as the Paul Volcker and not the Arthur Burns as it relates to inflation. Now, Arthur Burns obviously was, historically been seen as the guy who let inflation genie out of the bottle in the 70s around this fiscal dominance. So I guess there's two questions here. First of all, I mean, one of it ties into the inflation outlook, right? So do you think it couldn't be transitory? Do you think Jerome really believes that inflation, especially as it relates to tariffs, could be transitory? A. And then B, do you think if he is going to continue submitting to fiscal dominance, he's going to eventually decide this? He doesn't want to be the man that's remembered as the Arthur Burns and step away.
Well, at the end of the day, Powell's term is up in May of 2026, right? And so I think, if we're talking about, a return to 1970s style face-rippingly high inflation, I doubt that'll be at that level by, next year. This is probably a 2 to 5 year sort of story as the impact of the realignment of the global monetary order is, going apace. And obviously the recent Trump tariffs have accelerated that. So I think Powell is going to exit stage left at pretty much the opportune time. And whoever accepts into that chair next is going to be credited with the inflationary spike of, the 2020s, essentially. So I think Powell's going to get off quite easy historically because he's going to exit right before things go bananas.
So you do think whoever else is going to be on that rotation chair is going to be credited, well, is going to have to face this massive inflation. So you think we could see...
But I also think that person, I think the whispers are that it's probably going to be Kevin Warsh, as that's the dark horse for the next Fed chairperson. But he's firmly in the camp of, hey, the Fed is a political entity. We are here to print the money. We are here to make sure that the U.S. government reigns supreme as the empire. We are here to make sure that, the dollar reigns supreme. And we're going to do whatever is necessary to assist the Treasury and the federal politicians to enact these policies. And so I think the next Fed chairperson is going to be fully on board with Trump's policies and what he is trying to do with how he's trying to realign the global monetary and trade order. So I don't think it's going to be some sort of intellectual battle inside this person's head. They're going to be very outright, be like, look, this is what I'm here to do. I'm here to print the money. So let's do it. Instead of Powell, which is, it's transitory. It's not really inflation. I'm still really fighting that inflation thing. I really conquered it in 2022. Yeah. Don't say that I was the one who, reignited inflation. No. I did it. I did my job. I raised rates from 2022 to 2023. I did it. I'm the man, right? So in his mind, he did exactly what he should be doing. And he can pull whatever bullshit statistics he wants and, bandy them about the press conference talking about transitory this or that and feel good about himself in his own mind. That's what I think is going on.